Hello, Assalamu alaikum. Good evening, all of you. Welcome to ACCA Practice to Pass webinars for September 2020 exams. And I'm your tutor, Hanif. Today is day 3 of this webinar for paper PM F5. And today is 19th of August. First of all, I would like to make sure that my voice and my screen is all clear at your side. And I want response from you people in the question box. Come on, tell me, students, is everything fine at your site? All clear? Actively show the activeness. Okay, that's good. That's good. And now we are in a position to finish this performance measurement section. In day 2, we had discussed balance scorecard, building block model, value for money, and I also shared the answers of those questions with you people on WhatsApp group, and the writing skills and the writing tricks were same as we learned in day 1. So the section performance measurement is very important because approximately 20%, that is 1 CRQ, is usually examinable from this section. And today is day 3 and we are starting with our topic, transfer pricing. Now this is yet another challenging topic, and we will be starting this transfer pricing. And once again, I would like to uh, mention this, my number. This is already mentioned. If still anyone wants to connect with the WhatsApp group, he or she can. This is my WhatsApp number and you people can contact me. All right. Now, students, we are going to start our today's topic, that is transfer pricing, and that is also the part of the performance measurement section. Now, listen, students, this is our head office, and it has got 2 divisions. In the day 1, I already taught that division is something which has the separate location, and it has its own authority and decision making power, and the division is allowed to take their own decisions regarding the running operations. So, for example, there is a head office, HO, which is head office, and there are 2 divisions, division 1 and division 2. What is actually the transfer pricing means? Transfer pricing means you should assume these 2 divisions as a separate entities. Okay, do not treat them as a part and parcel of the single office, although they are the part of the single family, they are part of the single office, but they had to report their individual performance to the head office. Division 2 will be reporting to head office, division 1 will be reporting to head office, and it may be possible that they may be in a position to trade with each other. What is transfer pricing? That is a simple thing. Transfer price is something, the price at which one division sells the product to other division. Now let's say, for example, this is my division number 1, assuming this is my seller division and this is my buyer division. Now what will happen if division 2 needs any product? They can contact to division 1, and division 1 will sell. Division 1 will not provide the goods for free. What Because if division 1 will provide the product for free to division 2, it will it will be showing underperformance of division 1, and division 2 will be getting a product for free. That means its performance will be high, its performance will be good, its profits will be high. So division 1 should not give the product for free. Division 1 will sell, and that the transaction price and then the transaction price is known as the transfer price. What is transfer price? Transfer price is that price at which one division will sell the goods to the other division, will sell the product. Remember my words, division 1 will not give the goods for free. Why? Because it will reduce its profit, and the profit of division 2 would be increased. So there will be the unfair treatment. So what is the solution? The solution is that division 1 should sell division 1 should sell the product to division 2. Okay, now there are a lot of ways to set the transfer price. There are a lot of ways to set the transfer price, but there's a famous and most used approach, that is the opportunity cost based transfer price. Before proceeding with the transfer pricing calculations, first of all, let's understand about the concept of opportunity cost. What is actually the opportunity cost? It is the lost contribution from the previous work. For example, let's take up the common example which I will be displaying here. For example, do not copy this, just see and understand. For example, currently you are earning $20 contribution, $20 contribution in a day. For example, there's a measurement of a day. Okay, you are currently earning 20 contribution in a day, and I am, for example, there is a contract A and it requires your 1 day. If you will, and you have a very limited capacity, for example, you have a limited capacity, and if you will go to work for contract A, you have to lose this contribution. Now, if you will move towards contract A, you will lose this contribution of $20. So something which you are losing in order to perform the next work, then the lost income, the lost contribution is called the opportunity cost. What is basically the opportunity cost? This is my next work and this is my existing work. See, this is my existing work and this is my next work. In order to perform the next work, I will have to compromise my previous work because I have got the limited capacity. Okay, and something which I am losing here, this is called my lost income, my lost opportunity, my lost contribution. So what is the opportunity cost? Opportunity cost means this is the lost contribution from the previous work. This is the lost contribution from the previous work for the next work. Okay, for the next work, this is simply the opportunity cost. Now, students, just see this example, and I am removing all these unnecessary figures. For example, don't copy this, I'm just showing as a demonstration. For example, there is a salary division and its production cost is $12, and if it will sell to division 2, then it would lose $20 contribution. Now see, what should this division quote the transfer price, selling price? For example, me, Haris Hanif, I am the selling division, and you people are coming to me. You are my you are my division 2 of the same organization. Now I will have to quote you the transfer price. You will come to me and say, Sir Haris, division 1, what is the transfer price at which you will be able to sell to me? I will be able to calculate my transfer price. I will make a calculation. I will count. I will say like that way that 12 is my production cost. Okay. And if I will sell it to you, I will lose this 20 contribution. So I will also charge it from you. Now, totaling, I would be quoting to you people $32 the transfer price. Now what? That is my production cost. Obviously, it will be counted in my selling price. And this is something which I will lose from my external sales if I will transferring this product to the internal division. Okay. So I will be in a position. I'm repeating this example once again. Just listen to me very carefully. You came to me, just take up a scenario, you are a buyer division. You came to me that Sir Haris, division 1, seller division, I want this product from you. How much will you charge? I will be in a position, $12 is my production cost. Okay. Then I will estimate that if I will be selling this product to you, I will be losing my external customers and I will be losing this 20 contribution. So naturally, I will also be charging this from you. So I will be quoting $32 TP, transfer price. Now, what is the simple formula to calculate the transfer price? What should be the minimum transfer price? This the transfer price quoted from the selling division. Now students, if you are noting something, you should need to highlight this word minimum. Minimum transfer price. What should be the minimum transfer price? Remember, the minimum transfer price is from the seller division. Is from the seller division. Now what is written? The transfer price quoted from the selling division to the buying division by considering the opportunity cost, the lost contribution from the existing sales to the outside customers. Obviously, the cost applicable to transfer to internal division would be considered. So transfer price becomes, how will you calculate the transfer price? The minimum TP is relevant cost. Now there is something point to be noted. What is written? The relevant cost plus opportunity cost. What is opportunity cost? The lost contribution. The relevant cost means cost necessary for the transferring. Cost necessary for transferring the goods. Cost necessary for transferring the goods. This is what the relevant cost. I will be using blue color so that it may be easily visible. Cost necessary for transferring goods. Obviously, I will charge my cost, and if I will be losing some contribution, then I will also receive it from you. So the minimum transfer price would become relevant cost plus opportunity cost. It's so simple, no need to worry about that. We will be in a position to better understand when we go through this question. See, this is a question. I'm allowing you only 1 minute just to read this case. Just to read. No need to solve it, student. Just read this case. Okay. Now, students, this is the question which I am going to read, and you should pay your high level attention. Division 1 produces the product alpha which it sells to the external market and also supplies to the internal division 2 upon their request. The existing details, the existing details of alpha are, what is alpha? This is the product. Now, division 1 is the seller, division 2 is the buyer. Okay, now what is written? The existing details of alpha are, what is selling price? 105, variable cost 55, variable selling overheads 12, and fixed overheads 11. Remember, fixed overheads, fixed overheads will not be considered. Why? Because it is not relevant. Why not relevant, sir? Please explain. Okay, I am explaining. Because transfer pricing is the separate decision and whether or not the product will be transferred internally, the selling division has to bear this fixed cost. Now, this is something which is not relevant to this specific decision. For example, if you will not come to me, you will not show your interest to buy from me, I will still be bearing this cost. And if you will buy from me, I will still be bearing this cost. This is something against the principle of relevant costing. Now, relevant cost principles are being followed and fixed cost is totally not relevant. Now see what am I doing? How will I calculate the contribution? The contribution is calculated as selling price minus all variable cost. Now what is the selling price? What is the selling price? That is 105 minus 55 and 12. This is the variable cost. So 55 minus 12. What is the contribution? The contribution is 105 minus 55 minus 12. It is $38 per unit. $38 per unit. This is something the contribution. Now listen, division 2 has asked the product alpha, and due to its limited capacity of division 1, due to the limited capacity of division 1, it has to lose the external sales. Now me, Haris Hanif, is the division 1 and you people are division 2. You are coming to me and you are asking for this product, and I estimated that if I will be selling this product to you people, then I will be losing external sales. If I will be losing external sales, so naturally it means that I will lose some attractive contribution, which is $38. I will be losing this external sales, and naturally this contribution I will be losing. Next, if alpha will be transferred internally, then only 7% overheads, only 7% overheads relating to selling would be incurred. Selling person overhead, selling overheads, that is only 7%. Now, see what am I doing? What is the minimum transfer price? Minimum transfer price is calculated as relevant cost plus opportunity cost. Relevant cost plus opportunity cost. And what is the relevant cost? Yes, 55 will be taken because it is the production cost. Obviously, this will be counted because it is a production cost. So I will be counting $55 as a production cost, plus I will also need to count 7% of overheads, selling overheads, which is 12 multiplied by 7%. And that opportunity cost is the loss contribution, which is $38, so that I will be in a position to quote you at least this amount. This is the minimum transfer price. Sorry, this is the minimum transfer price, and that it is written, it is quoted by seller division. The seller division will naturally want the cost which is necessary to transfer the cost internally. All right. And then 55 plus 12 multiplied by 0.07 plus 55 plus 38. It becomes 63.84. No, sorry, 93.84. 93.84 per unit. This will be the transfer price which seller division will charge at least the minimum transfer price. This is the minimum transfer price. Lost, there is a question. There's a question that, sir, lost profit cannot be opportunity cost. The answer is no. It's always the lost contribution. Why? Because regardless of your decision, the fixed cost would be incurred. And so it is ignored in the decision making. Now next. Next is written here. Division 2 has obtained the rate from external supplier 94.5. Now what is 94.5? It is something quoted from outside supplier, and this is something maximum price, maximum transfer price which buyer division can pay. Now listen, I am repeating the whole scenario once again. You first went to the market. Imagine yourself, you first went to the market and you obtained this rate from the market, and then you made a mind that this product worth 94.5 per unit. Then you came to me, to your internal division, and I am quoting you at least 93.84. Now it is up to you whether you want to purchase from me or from outside. Obviously you will prefer this. Obviously you will prefer internal transfer, but this is something which is the maximum transfer price which the buyer division can pay, is ready to pay, because first of all you went to the market, you obtained the rate from the external vendors, they quoted you 94.5, and you made your mind, there's a mindset that this product worth 94.5 in the market, and then you came to me, to your internal division, and I will be quoting 93.84, and obviously you will prefer this internal transfer. All right. So the student who was asking about what is the purpose of 94.5, is it clear right now? Is it clear right now? Yeah, services can also be used for that. Okay. Now that is something, that transfer price which is relevant cost plus opportunity cost. I am moving. I am just giving you. I'm just giving you 1 minute just to see it thoroughly once again. Just to see it thoroughly once again. If you want, and if you want to note something, you can. Just 1 minute, students. 60 seconds. obviously the seller division will charge its necessary cost, and that is 55 plus 7% of $12. This is the necessary cost and opportunity cost which it will be losing from the external sales. All right, students. Now I am moving ahead. There is a question. I need to address some questions. So minimum transfer price will always have variable cost. The answer is yes. Yes, you can show. Yes, Aisha Musani, this is the maximum transfer price. It is already mentioned here. This is the maximum transfer price. And this is a price which buyer division can pay. And this is the market rate. And this is the market rate which you have obtained from the market. Okay. Now, students, I am proceeding with the next thing. And there's a next question I will be solving here. I will be solving in this sheet as well. And you need to first go through this question. This is a very important question. It's very important question, excuse me. Just read this question. Hurry up. Muhammad Afam, I give the time to read this. Yes, Faizan Muhammad Khan. If the fixed cost is specifically incurred to transfer, then it will be considered. Azhar Abbas, yes. Maximum transfer price does not have any calculation. Maximum transfer price is the market rate. That's a simple thing. Now, students, I hope you people might have gone through this question, and I'm reading this once again. And there is something changed from this from the previous question. Now, see what the requirement is asking. Calculate the average transfer price. First of all, I am reading this question. Division 1 produces the product alpha, which is sold to the external market and also facilitates the internal division of the company. The maximum capacity of division 1 is to produce 150,000 units. Now again, division 1 is acting as a seller and division 2 is acting as a buyer, and fixed cost will not be relevant because the methodology which we are studying is the opportunity cost. See what is the name? It's the opportunity cost based transfer price. Okay, so in the opportunity cost there's a loss contribution and fixed cost is relatively ignored. Now, uh, reading once again, produces a product alpha with the maximum capacity 150,000. Now what is written here? Maximum external demand is 120,000 units. 120,000 units is the demand for seller division. Now listen to me very carefully. Stop here. Stop here. Now this is my next slide. I am writing something here in this slide, and this is too much important. Just pay attention. See, the seller division number one, seller division number one. Okay, it's got the capacity to produce only 150,000 units. All right, this is its ending capacity. This is a limited capacity, maximum capacity, and that it has 120,000 external customers external customers, and that 30,000 units are known as free capacity. What do you mean by the term free capacity? You can memorize these words: either free capacity, either idle capacity, either spare capacity. Okay, now just listen and use your calculator. Okay, 150,000 units is the capacity of the seller division. This is my maximum capacity to produce, and my external customers are 120,000, and 30,000 is having the free capacity, idle capacity, or spare capacity. All right, now what was the scenario in the question? Division 2 has requested 150,000 units. If transferred internally, then there will be saving of selling overheads. Now wait, division 2. Now just try to understand the thing, what is actually happening here. Division 2, division 2 is also asking for 150,000 units. Division 2 is asking for 150,000 units. Imagine if the division 1 will transfer entire 150,000 units, then it will be losing these external customers. These 30,000 units are at the free capacity. Now, very important, very trigger point is that opportunity cost will be counted when you have opportunity of income. When you have opportunity income, I'm writing, I'm writing here, I'm writing here something with green color, that is opportunity income. Opportunity income. And here no opportunity of income, because my maximum external sale is 120,000. Now, if I will be transferring 150,000 units to you people, I will be losing 120,000 units, my opportunity income. So when you have something to lose, you consider opportunity cost. Here, there is no opportunity of income. Okay, so no opportunity cost. So no opportunity cost. Here is opportunity of income. So there is opportunity cost. And opportunity cost is simply the loss contribution. So if division 2 is also asking for 150,000 units, then division 1 will be losing contribution only on 120,000 units. All right, because 30,000 units are at my free capacity and there is no opportunity of income, and when there is no opportunity income, there is no opportunity cost. When there is opportunity income, there is an opportunity cost. It's a very simple formula to memorize. Now I need to go back to the question once again. Now see, what is the contribution? What is the contribution? So it is calculated selling price minus variable cost. Selling price is 60 minus variable cost 29 and 7. What is the contribution? 60 minus 29 minus 7, that is 24. This is my contribution. Remember the figure $24, which is the contribution. Now it is written, if transferred internally, then there will be saving of selling overheads, which means when the product will be transferred, then selling overheads will not be incurred. It will be saved. Now listen, what was the formula to calculate the minimum transfer price? Sir, the minimum transfer price was calculated as relevant cost plus opportunity cost. And remember, opportunity cost is counted when you have when you have earning opportunity. Okay, and see, previously on 30,000 units you do not have no opportunity of income, so we will not be counting the opportunity cost. Now listen, what will be the thing? The thing would be, you are asking me for 150,000 units, and that if I will be giving to you these 150,000 units, then I will be losing 120,000 external sale. What is my relevant cost? The relevant cost will be this $7 will be saved if transfer internally. So the only relevant cost will be the 29 production cost, and contribution is $24. Remember the figure. 24 is the contribution. Okay, the relevant cost will be, what was the figure? 29. And what is the opportunity cost? $24. Okay, $24. This is a loss contribution. Okay, so the transfer price will be, so the transfer price will be 29 plus 24. It would become $53, and that for remaining 30,000 units, 30,000 units, relevant cost will be 29 and opportunity cost will be 0, because there is no opportunity income. It is called a spare capacity. So the price would be $29. Now what will be my answer, sir? Okay, the answer will be shaded here. 120,000 multiplied by 53, this will be the sales, and 30,000 will be supplied at 29. This will be the answer. Okay, so now it total becomes 150,000 units, and that 120,000 multiplied by 53, that becomes 6360,000, and 30,000 will be supplied at 29, that is $870. Now the total revenue is 7230,000, and that this will be my transfer price by dividing. Now my average transfer price will be 7230,000 divided by 150,000. 48.2 is my answer. When you will come to me, and this is my internal calculation. Listen students, this is the internal calculation of the seller division, and I will not be showing these calculation to you people practically, because I will be calculating, because I will be calculating because I will be calculating this my internal calculation, and I will be quoting to you people. You will come to me. You will come to me, and you will be asking the price, and I will be quoting this transfer price, which is per unit. Okay, so remember the golden rule, that opportunity cost, which is the loss income when you have something earning opportunity. So simple. So simple, guys. When will you count the opportunity cost? When you have the opportunity of income. When you do not have the opportunity income, there is no opportunity cost. Okay, fine. Understood, all of you? No. Understood, all of you? No, no, no. Not only 10 to 15 to 20 students. No, everybody. Understand, all of you. Got it clearly? Okay, that's very good. Okay, okay, okay. That's very good. That's good, students. It is something, it is something, that needs practice time as well. And the very good news is that you have got the recording access of this webinar as well, and you can recall it tomorrow when it will be uploaded. Okay, so this was the thing, and this was the thing. Transfer pricing is something which you need to revise once again. And this slides, my lecturing slides, I will be sharing after the webinar. So right now we need a prayer break, and the prayer break is exactly 10 minutes. Okay, it is 7:40 now, and I will resume at 7:50. It's our prayer break, only 10 minutes. Okay, Yes, we are back from the break. Yes, we are back from the break. Everyone, is everything fine? My voice screen. Come on, students. Answer in the chat box, in the question box. Is everything fine? Loud and clear? Okay. Okay, that's good. Now, uh, it's an average transfer price. It's an average transfer price which we had calculated. Okay. Now, this is the transfer price by considering all the facts and figures. Why? How do you calculate the transfer price? The transfer price is calculated as relevant cost, the cost which is necessary, and the opportunity cost, which is the lost income, the lost contribution, and the lost contribution as an opportunity cost is countable when you have something, when you have earning opportunity, and when you do not have earning opportunity, the opportunity cost is not counted. All right, students. Now, in the handout section, two files are attached. Two files are attached here, and the question is Botch company, and this is a CRQ which is 6 marks, 6 marks, and 3 marks. 6, 6, 12, and 3, totaling 15 marks. All right, this is a CRQ which is a Botch company, and first of all, I would like you people to read this case. Botch company has two divisions, pottery and painting, and this is something the information, and this is something information. Students, just read this case. Mr. Bilal Malik, selling overheads, it will be mentioned whether we will be able to count or not. Mr. Asadullah, I read your comment, and that is due to the timing difference. You and my location, it may be possible. Okay, friends, this is the case of Botch company. What is written? Botch has two divisions, pottery and painting. Pottery and painting. The pottery division makes unglazed bowls that are then sold to the painting division for decorating and glazing. There is a division which is pottery division, and this is a painting division. This is something which is a seller division, and this is a buyer division. Students, the question is covering a lot of areas, so pay high level attention here. This is the pottery division, which is the seller division. Painting is the buyer division. Okay. Now these 1, 2, 3, 4, 5 bullet points relevant for the pottery selling division. Number one, production capacity is 2000 units. Fixed contract, yes, this is something notable here. Fixed contract to sell externally 800 units at a selling price $35 each, which means that pottery division had made a contract somewhere, we don't know. This is the external contract according to which 800 units must be supplied at $35 each, which means you can say 2000 and 8000 it's the contract which the pottery division needs to sell, and then 1200 is the idle capacity. 1200 is the idle capacity. Okay, next, the variable cost of making unglazed bowls $15 each. Now what is the variable cost per unit? That is $15. Variable cost is $15 per unit. And then total fixed cost which are generally incurred for the period amounted 8,000. 8,000. And current transfer price is $25. Oops, the transfer price is given. Yes, the transfer price is given. Then what we are supposed to calculate? We have to read the requirement. Okay, this is the thing. Now, painting division, painting division. The external demand of painting division is 1,000 units. Obviously, to fulfill the demand of painting division, it will be purchased. It will be purchased from division pottery. That is 1,000 units. The transfer price is agreed. See, the question is so simple. The question has given you the transfer price. Then what will be the requirement? Let's read the case. The painting division needs 1,000 units which will be purchased from pottery, obviously at $25. Okay, next, next, what is the thing? The price which painting division charges by selling in the market is 50. Now, what is the thing actually happening here? The painting division purchased this product at $25 and sells at $50, which means painting division is making profit of 25 per unit. You can say the contribution. The only other fixed cost of painting division amounted 6,800. Next, painting division has been offered the option to source the unglazed bowls from external supplier at 24. Now requirement number 1, calculate the profit for pottery division showing the contribution from external and internal sales, comma, profit of painting division and total profit of the group. Total profit of the group. Now what do you mean by the total profit of the group? Listen, right here, what is the group profit? The group profit is division 1 profit plus division 2 profit. When it will be combined, it will be said to be the group profit. Okay, now see what is the 6 marks requirement is. They just want you to prepare the income statement kind of thing and need to calculate the total profit at this current situation. At this current situation, you need to prepare just the profit statement. So students, can you prepare the income statement? Can you calculate something? I will be solving this question here in this sheet. I will be solving this calculation, or you can say I will be explaining this question. Okay, I will be explaining this question here in this sheet, and it will be your assignment to finish this question by yourself as an assignment, as an half assignment at the ACCA CBE platform. But I will be guiding you. I will be showing you the answer. I will be solving here, but you need to solve it by yourself so that you will be able to give the time to the studies as an assignment. Now, what is the thing? Calculate the profit for pottery division showing contribution from external and internal sales. All right. So students, I am removing all these markings. I'm removing all these markings, and we will now calculate the profit which is being asked here. Now students, first of all, I will be calculating the profit of pottery division right here in front of the space available here. Okay, now pottery division, what is basically the production capacity is 2000, 8000 is a fixed contract, and 12,000 is the idle capacity. Now pottery division is making two things. It is making internal sales plus it is making external sales. Okay, now what is the internal sales? What is the internal sale? That is 1000. What is the external sale? That is 800. All right. Now, see this thing. Internal sale is being sold at $25, which was the agreed transfer price. That is $25. So it is earning the sales of 25,000, and externally it is selling at $35. So 800 multiplied by 35, it becomes 28,000. See, I am calculating here in this sheet, and I'm not leaving this question totally dependent on you. I am calculating here. You need to note down or capturing whatever you convenient is at your part, and you need to solve it at ACCA CBE platform. Okay, now what is the variable cost? What is the variable cost? The variable cost is $15. So 1000 multiplied by 15, which becomes 15,000. That means 25 minus 15, that is 10,000. And here variable cost 800 multiplied by 15, that becomes 12,000. 28 minus 12, that is 16,000. Okay, this is the contribution because the question asked me showing the contribution from external and internal sales. I showed them the contribution. Now what is the total contribution? 10 plus 16, that is 26,000, and that fixed cost is 8,000. Now this is the profit, 26,000 minus 8,000, which is 18,000, the profit of pottery division. This is the net profit. Any confusion? This is a straightforward thing. This is a straightforward thing, students. Is there any confusion? All clear? Because it is selling. It is selling 1000 units internal sales. See, the internal requirement is 1000 and external requirement is 800. And the external requirement is 800, students. Yes. 12,000. This is something, okay. This 12,000 was calculated by 800 multiplied by 15. That is a variable cost. 15 multiplied by 800. 15 multiplied by 800. That is the 12,000. This is how I got the 12,000 figure. Okay. No. This is not the group profit. This is not the group profit. This is only the profit of poultry division. This is only the profit of poultry division. Uh, Mamuna Chaudhary, 200 spare capacity will remain spare. That is no opportunity. So simple. Samuel, you asked for 12 under external sale for variable cost. Is it clear to you now? Samuel, okay, that's very good. It is now the it is now the profit of 18,000 profit for the seller. Okay, now we need to calculate the profit for buyer division, and the buyer division is now sourcing 1,000 units and it is selling to 50. Now see, I am using the blue color for painting division. For painting division, what is the sales? The sale for painting division is 1,000 multiplied by 50, that is 50,000, and the current cost is 1,000 multiplied by 25. That is only the purchasing from internal division, that is 25,000, and that 25,000 is the contribution, and the fixed cost is 6,800, and the simple profit is and the simple profit is 25,000 minus 6,800, that is 18,200. Now see, this is the profit of painting division, this is the profit of pottery, this is the profit of painting and pottery respectively. And what will be the group profit? The group profit will be 18,000 plus 18,200, which totals 36,200. Now this is something the group profit. This is something the group profit. This was the simple question was asked just to prepare the income statement. Asadullah, because it was not being asked, uh, Mr. Asadullah, that I'm addressing your question, your specific question, and obviously it is relevant for all of you. It is relevant for all of you. It is relevant for all of you why the painting division will not be sourcing this at 24, because it is not being asked. That is the requirement, something for part B perspective. In part A, it is just being asked to calculate the profit for pottery at the current transfer price only. Calculate the profit, which is the current dealing. And one student asked how this 25,000 came. See, this is the arrowed line here using orange color as well. The painting division has bought this from the pottery division at $25. So 25 is the sale for pottery division, and this is the cost for the painting division. Is it clear, Asadullah? Okay. Mr. Amir Hamza, this was not being asked. The question was just to calculate the current transfer price. Okay. Fatima Shifna, is it clear? How did 25,000 came? Fatima Shifna, is it now clear 25,000 where it came from? Okay, that's good. Because the question is silent, that is simple means that using the current transfer price, it is not specifically mentioned in this requirement. In this requirement, it is not specifically mentioned, but the question is silent. Now this will be the next part. Now the group profit is now students. Uh, painting division, just see this thing. Painting division has got this. Painting division has got this offer from external supplier at 24. Painting division has got the supplier for offer from the external supplier at $24. Now listen to me from the painting division perspective. Should painting division buy from internal or from external? Hurry up, come on, answer me. Answer me in the chat box. What should painting division do? Should it buy from me, which is selling at 25, or from external? Obviously from external. 100% of the audience is correct. 24, yes. Now listen to me very carefully. The next part of the question is discuss. Now you have to discuss. I am writing here, I will be writing here points, and from the previous last two sessions, I taught you how to write in an examination, and you people do not need to worry about that. I will be giving this task. See, I have solved this question. It is just what you have to do. You have to calculate this thing on the spreadsheet on the ACCA platform. And similarly, I will be writing the theoretical points, and you have to convert into the detailed paragraph. And I will be sharing my answers as well. Okay, so no need to worry about that. Now, discuss with suitable calculations the effect on profitability of pottery division and the whole group if painting division will buy from outside. Now advice. See, the question is asking for your advice now. In the performance measurement area, it was not being asked to advise. Now here, the question requires to advise you. Advise the suitable transfer price if group interest is to be promoted. Now listen, the question is asking discuss with suitable calculation the effect on profitability of pottery division and the whole group if painting division will buy from outside the supplier. Now listen to me, if you will buy from outside supplier, will the pottery division losing the contribution from you? Say yes or no, only yes or no. If you will go outside, if you will go outside, will the pottery division be losing the contribution? Say yes or no. Yes, obviously. Then how much the contribution is losing? The contribution is dollar 10,000, which I am currently earning from you. Contribution. Okay, 10,000 contribution I am earning from you. So see, if painting division will go to supplier at 24, then painting division will be losing 10,000 contribution. Okay, 10,000 contribution will be losing. I am writing this thing in a negative manner because it is a loss to the painting division. But tell me students, will there be the benefit to the painting division? Sorry, this is a pottery division. Sorry. Yes, it's a pottery division. It's a pottery division. Pottery division will be, previously it was right. If painting division will go at, then losing contribution, I should write in just like that way. Then the effect, I should write in some other way. Okay, see their effects. What will be the effect? That is lost contribution for pottery. That is 10,000. Now, next, will there be additional benefit to painting division? Say yes or no. Will there be additional benefit to painting division? Yes or no? Students, yes or no? Yes. How much? How much? How much? How much on per unit? $1 per unit. It is so simple. $1 per unit. And there is benefit to painting, that is $1 per unit. $1 multiplied by 1,000 units, that is 1,000. Now listen to me very carefully. Treat this whole group as a single family. As a single family. If one cousin brother is not purchasing from another cousin brother, he is going outside the family, then this pottery division will be losing 10,000 contribution. This will be gaining. What will be the group effect? What will be the group effect? Something, the profit which was retained in this group, now it will be out. What will be the group effect? 9,000 loss. 9,000 loss to the whole group. Come on, tell me, is this calculation understandable to all of you? Okay, 10,000 contribution, that is the contribution. The one who was asking for this figure, this is 10,000. It is the 10,000 contribution here. This is the 10,000 contribution from internal sales. 10,000 contribution from internal sales, which was already calculated in part A. Which was calculated in part A. And Janet Newton, how did $1 came? Okay, $1 came like from 25 minus 24. Previously, the internal division was transferring at 25 and it got external offer at 24. That will be $1 saving. Okay, Janet Newton. Abigail, you're welcome. Okay, that's good. So that is $1 saving. All right. So now tell me, who is in the higher bargaining position? The buyer division or the seller division? Come on, tell me, who is in the higher bargaining position? The buyer or the seller? Now, this was the first part which you will have to discuss. I will strongly recommend all of you to type this question, this answer on ACCA platform. This will boost up your confidence. Okay. Now, advise the suitable transfer price if group interest is to be promoted. Remember my words, whenever you are being asked to give the advice on the transfer pricing, always advise from the group angle. What will be your advice? What should be the transfer price? What should be the transfer price? Come on, tell me, what should be the transfer price? 24. What should be? What should be? It should need to be changed, because if the transfer price will not be changed, the painting division will go out. And in order to facilitate to the painting division for a win-win situation, the suitable transfer price should be set. Now come on, what is the maximum transfer price which buyer division is ready to pay? Advice is to lower transfer price at $24, because at 24 painting division would be agreed to pay. Okay, now what will be the benefit of this? Remember my golden words: whenever you are being asked to give the advice, always write the benefit. Always write the benefit. Now what will be the benefit? The benefit is that painting division will come back and this 9,000 loss and group loss will be compensated. See, I have approximately written all the things. You just need to use your helping verbs because it will help you to complete the sentence. Okay, now listen to me. I am reading my answer. I am reading my answer to facilitate you for part B. Just leave everything, listen to me only. What will you write? You will write that discuss the suitable calculation. You will write that if the transfer price will not be changed, then division painting will go out to source the product at $24. And if division painting division will go out, then pottery division will be losing $10,000 contribution and painting division will be obtaining the benefits of $1,000. Consequently, the whole group will be affected by $9,000 loss. So the advice is that transfer price should be lowered because the buyer division is at bargaining position and it will be able to pay, it will be ready to pay $24, and the benefit would be that painting division will come back and group loss will be compensated. Your 6 marks. Celebrate your 6 marks. Understand how to write the answer? Students, understand how to write the answer? All of you. Okay, that's very good. That's very good. Now, part C is something which is totally the assignment. Part C is something which is totally the assignment. I will not be reading the requirement even because it's just for 3 marks, but do not ignore it. See, I usually respond you people individually, and I normally share all the handouts and my answer scripts with you people, but this is something just to think and solve. Okay, I will not be even reading this requirement. This is pure assignment for you people. Will you try whatever the thing? Don't worry about the solution and don't worry even about the explanation. I'll make the video and give it to you people. Don't you people worry, you know me well. Okay, will you try? Will you try? Say yes or no. That's very good. It's always good when I receive the answers. Okay, that's very good. And don't worry about the solution, students. This is the assignment to test yourself. Whatever the answer, I will not ask you to calculate it correctly. I ask you to calculate it, whether it is correct or not. Let's see it later. Okay. So this was the pottery division. Now I am coming towards the next lecturing slide. Now this is the target based transfer pricing. The methodology is totally changed. Now this is the changed method of setting the transfer price. This is something the changed method of transfer price. What is written? This is the target based transfer pricing. Now see what should be the minimum transfer price. This is the very important line. This is a very important line. If selling division has to meet the target given by the head office. Now See this thing, there is no opportunity cost, no focus on opportunity cost, no focus on opportunity cost. There is only focus on meeting the target. There is only focus on target, only focus on target. Now the simple thing is that what should be the minimum transfer price? What should be the minimum transfer price if selling division has to meet the target given by the head office? Now this double box and yellow shaded box is a very important thing. Just just think of the target profit. See, just think of the target profit and reverse back to the sales. Your transfer price will be automatically calculated. This is a simple formula. This is the simple formula for the target base transfer price. Just think of the target profit and reverse back to the sales and calculate the transfer price. See how. This is the question. Read it thoroughly. Read it 2 times. So why 2 times? There is a reason. Read it 2 times. And remember, no opportunity cost, okay? Because the focus is on target. When you are focusing on the target, there is no opportunity cost. Read it 2 times. I think you have read 1 time. Now read it second time as well. There is a reason to read it 2 times because this is a changing method. Okay, now students, I am reading this question and just note here what should be the transfer price for 80,000 units if division A has to achieve its exact target. Okay, division A produces the product beta and the maximum production ability is 150,000 units. Oh, sorry, 180,000 units, and maximum external demand is 150. Now, Division 1 has got that target to achieve 25% return on capital employed. Return on capital employed. And what I gave you the trick? I gave you the trick that just think of the target profit. Just think of the target profit and reverse back. Okay, sir, what is the target profit? What is the target profit? Sir, the target profit is 25% ROCE, 25% of capital. Okay, so now the target profit is, what is the capital figure? 4920. 25% of 4920 triple zero. What is the target profit? What is the target profit for division A? Division A has to earn 25% of 4920,000. It is 1,230,000. This is the profit which is target for division A. All right, this is the target for division A. It has to meet this profit target. Now, there is not to worry about the opportunity cost. There is no concept of opportunity cost because the dynamics is now changed. Now the division A has to only focus on its target. Now see what is the production capacity, that's 180,000. Now see here, what is the capacity, that is 180,000, and for division A the capacity is 180,000. Now see, division 2 has requested for 80,000 units. It will transfer 80,000 to internal sales and will be making 100,000 units external sales. Now you might be arguing that, sir, it will be losing the contribution. Forget that. Just focus on the target. Just focus on the target. That's it. No focus. Once the target is there, there should be no other focus. Okay. So this is the maximum capacity. It will be transferring 80,000 to division 2 and 100,000 to the external sales. Now external sale price is 42. Now just look at this figures only. Just look at the figures, which is yellow shaded. Just look at the figures. External sale is 42. Variable cost is 19.5. Total fixed cost 1500,000 and capital employed is given. And the target profit is 1,230,000. Okay. Now see, what am I doing in my next slide? Just see. Don't try to copy, please. Don't try to copy. Division A has to meet target. Has to meet what? Target. And what is the target? Sir, it's a profit of 1,230,000, which I had calculated. Okay. What is the division? What division A will be doing? Sir, it is making 80,000 internal sales. Internal sale means to the own division and 100,000 to external sales, which I had already mentioned here as well. Okay. Now see this thing, see the magic. Division A will be making internal sales. It will be making external sales. Then it will have to minus variable cost. It will have to minus fixed cost. Then it would be earning the profit. Now what is the requirement? The requirement is the transfer price for 80,000 units. Okay, something which is unknown in the basic mathematics calculation, we assumed it as X. Okay, what is the internal sale? Sir, it's 80,000 multiplied by, sir, I don't know, this is something X. X is my transfer price. What is the external sales? 100,000. 100,000. It is making external sales at $42. It is given in the question. $42. Okay, so how many total units this division is selling? 180,000. So sir, minus variable cost 180,000 units, the combined 180,000 units multiply by what is the variable cost, that is 19.5. Okay sir, 19.5. Now what will be the fixed cost? Sir, it is given the fixed cost is 1500,000. This is 1500,000 and now it has to achieve the target profit. What is the target profit? 1230,000. Now this is 80,000 x. X is my transfer price, which is unknown to me. This is 4,200,000, and this will be 180,000 multiplied by 19.5. It is 3510,000 minus 1500,000 is equal to 1230,000. See, the last figure is constant because I have only focused on my to meet the profit. No matter I will be transferring to the internal division at $1, $2, $5, $10, doesn't matter. My target should be fulfilled. That is the main focus. Okay. Now you can substitute these values. It will be 80,000 x, and all the values will be shifted towards the opposite side of is of the equal sign. Okay, now what will be the figures? 1230,000, that will be plus 1500. You will have to move the figures to the opposite sign, to the opposite area. The sign will be changed. Now just calculate x, which is TP, transfer price. Okay, if I am writing all, so I should write all. 80,000 x is equal to, I'm counting these figures, 1230 plus 1500 plus 3510 minus 4200. It is 2040. And x, which is TP, now 80,000 will be divided here, and that I will get 25.5 per unit. I will be ready to charge 25.5 because it will be able to meet my target. Now, so this will be the transfer price to meet my target. Now, isn't it? See, the dynamics of the question had been changed. The focus of the selling division is now shifted from opportunity cost towards meeting the target. Is it clear, all of you? Is it clear, all of you? Just answer me in the chat box. Is it clear, all of you? That's good. Aisha Musani, transfer target profit is nothing reversed. We have to think like a reverse manner. No, no, no. For what's fussy, the capacity is 180,000. Reverse back to sale mean we have to calculate like a reverse manner, like that way. Think for the calculate the transfer price. You have to go back. You have to go back. Okay. Yes. Yeah. Simran, yes. Our priority is on target profit. Welcome. Fatma Khan, because you need to make that target profit. You need to make that target profit from both internal and external sales. Yes, Mr. Nadeem. Yes, Mr. Nadeem, when the situation is on the target profit. Okay, so this is the target profit. I'm just explaining once again. Okay, students. One or two student were saying to repeat it once again. I will not be calculating the figures as well, but I will be just explaining the things. See, what is the target? The target is 1230, and division A will be making 80,000 internal sale and 100,000 external sale, totaling 180,000, which is the only capacity of seller division. And seller division has to make the target profit of 1230. And from both internal and external sales, division A wants target profit of 1230. I just I just prepared the income statement in a horizontal manner to save my page and to make it visible in one sheet. This is the internal sale. This is the external sale. Now the internal selling price is unknown to me, which is my requirement. External sales, there's a total sale minus variable cost minus fixed cost, there's a total profit. So I did the reverse calculation and got 25.5, which means that I will be in a position, I will be ready to sell at 25.5 to my internal division, because it will be the achievement of my target. Okay, the student who demanded to repeat, is it clear right now? Is it clear right now? Okay, you're most welcome. Now I am moving towards the next agenda for today's class. I hope the transfer pricing is clear, but I know that to some students it would be still confusing some element, because this is the topic which needs to be revised once again. The recorded webinar will be available to you as well, and you can access that once it will be uploaded. Okay, so now that was the transfer pricing. Now students, there is another topic which is the learning curve. There is another topic which is the learning curve. Now see, what do you mean by the term learning curve? Learning curve is basically something. Imagine yourself, take the example of yourself. When you first drove the car or when you first ride the bike, it needs more time for you people. When you are used to of some work, obviously you will take less time on the next units. Now what do you mean by the term learning curve? Learning curve means labor time is reduced due to the continuous nature of work, because it will become the practice, because it will become the practice. Practice makes man perfect. This is a very common saying. And when you are used to of some work, you will be champion, and your time is reduced due to the continuous nature of work. The time is the accumulated average time. Now what do you mean by exactly the term average? For example, some on first unit you took 10 hours. For example, on 2 units you took 9.8 hours. Number 3 you took 9 hours. Number 4 you took 8.7 hours. Okay, so you need to calculate the average time. Now on average, you will be experiencing the reduced time. You will be experiencing the reduced time. So this is not the absolute time. This will not be measured. Obviously, we all are human beings. Sometimes we take high time, sometimes we take less time, but due to the continuous practice, this is a situation when I will be in a position to when I will be in a position to take less time, and the time measurement will be in an average format, in an average form. Okay, like first unit 10 hours, second unit 9.8 hours, third unit 9 hours, number 4 8.7 hours. It may be possible number 5 unit I will be taking just 8.6 hours, only a very small decline of time. So that is why we need to calculate always the average time. Now the next thing is the constant learning rate is applied. This is the assumption. This is the assumption. Basically the learning curve theory was introduced by the aircraft company, and this is their theory, and the theory assume that the learning rate is constant. This is the assumption. Now practically the learning rate might be different, because it is my learning caliber, it is your learning caliber, and it depends on the human mental health, mind activeness. Obviously there are human effects there, but the theory, this is the theory, this is the theory which assumes a constant learning rate in all the situation, which is obviously is one of the limitation of the learning curve theory. But the time comes when learning is stopped and time per unit becomes constant. Obviously you think that when you will be making, for example, one unit you take 10 hours, when you will be making second unit you take 9.8 hours, when you will be making third unit you will be taking 9.5 hours. Obviously the time comes when the learning is stopped. Can it be possible that at 15 units the time is zero? This is not a magic. This is not a magic. The time cannot be zero. You have to make some efforts. Huh? You are not champion enough to just look at the raw material and it will be converted into finished goods. No, the time comes. The time comes when the learning will stop. The time comes when the learning will stop and time per unit will become constant. Let's say it is 8 hours on 5 units. The time comes when the learning will stop. Okay. So it is not possible. It is not possible that time would become zero. So slowly and gradually, when you are habitual of something, you will be taking less time on the next units, but that time cannot be zero, obviously. All right. So the learning will stop somewhere, and this will be the constant time for all the next units. For all the next units. All right. So is it clear the theory of learning curve, all of you? I will be moving towards the question of learning curve, and there is a OTQ style of question waiting for us. Is it clear, all of you? This is a very small introduction of learning curve. Learning curve, learning curve, learning curve. The learning efficiency. Okay. Okay, great. Now, students, I am moving towards my next slide. For the question which we are about to do here, and then we will be doing the OTQ style from the specimen paper. See why I am selecting the specimen paper, because it is the sample paper from examining team. Okay, now this is the learning curve formula. The formula is something you need to memorize. Y is equal to ax power b. What is y? This is average time per unit. What is a? This is the time on first unit. And what is x? Number of units. And b is this log learning rate upon log 2. Now log is something which is available, the option is available in your scientific calculator, and also the calculator sorry, and also the calculator which is attached on the ACCA platform. Log learning rate upon log 2, and usually this value is given in the question. Usually it is given in the question, but do not expect it always, because I want you people just to able to calculate this log learning rate upon log 2. All right. Now what is y? This is average time per unit. Y is equal to ax power b. Now students, I am moving towards the question, and this is the question. I am reading, it takes 20 hours to make first unit of the product. It takes 20 hours to make the first unit first unit of the product, and thereafter constant rate of learning will be applied 80%. Labors are paid at 15, and the learning index. Now what is learning index? The learning index is B. B is minus 0.322. This figure. This is called the learning index. Usually it is given. Okay. Now see, this is minus 0.3. What is the total labor cost for 50 units? Now see students, what am I doing? What am I doing? Y is equal to ax power b. This is the formula of learning curve. This is the formula of learning curve. And what is y? This is the average time per unit. This is the average time per unit. Now what is a? What is a? Sir, the a is time on first unit. That is 20 hours. Multiply by what is x? What is x? Number of units. Now what is the requirement? 50 units. Multiply by 50. What is the value of b? The value of b is minus 0.322 minus 0.322. Now students, whatever the answer I will be receiving, this is known as cumulative average time per unit. Remember, per unit. So I am writing that way, that this is the average time per unit. And how many total units are there? Total units are 50. Total units are 50. So what you are supposed to do at the end, you will need to multiply it by 50. It will be giving you the total time. Total time for 50 units. The total time for 50 units, because this figure is the average time per unit, and you will multiply by 50 units, you will receive the total time. Okay, now the total time for me is 50 power minus 0.322 multiply by 20 multiply by 50. It is 283.75 hours, and the labor is being paid at $15. Multiply by $15. So that will be the labor cost for total 50 units. 283.75 multiplied by 15, that becomes $4256.25. This is the total labor cost for 50 units. Now the yellow shaded area, this one, the yellow shaded area is the average time per unit, and we need total time, so we need to multiply by 50 to get the total time, and this is the total labor cost for 50 units. Awais Khan, this 80% shows the learning rate. Mr. Awais Khan, 80% shows the learning rate. 80% shows the learning rate, which you can assume like that way, that labor time is reducing by 20 percentage. If it will be 90%, then labor time is reducing by 10%. This is the time where the labor reaches after reducing the time. So you can say that labor time is reducing by 20 percentage. Yes, Mr. Awais Khan, is it now clear to you what do you mean by 80 percentage? Okay, I'm repeating once again. Uh, this 80%, Usman, I'm repeating this. This 80% means that labor time is reduced by 20%. If the learning rate might have been given 90%, that means labor time is reducing by 10%. Okay, now, students, I am moving towards my next slide. Towards the next slide, I am moving, and the scenarios will be changed there. Uh, See this question. Hurry up, just read this. Just read this question. Okay, now students, I am reading this question. See what is the requirement here. What is the total labor cost for 70 units? Now it takes 10 hours to make the first unit of the product, and thereafter a constant rate of learning will be applied, that is 90%. So you can say that time is reducing by 10 percentage. Labors are being paid at $5 per hour. The learning index, which is B, 0.152. The learning will stop after producing 30 units, and the time taken on 30th unit will be the time for all the next units. Okay, now see, the learning is stopped at 30th unit. See, just read this sentence, which is shaded by a yellow color. The time taken on 30th unit will be the time for all the next units. Now see, remember this, my words, whenever it is written in the question that learning is stopped, so just calculate the time on that unit where learning is stopped. Okay, your learning is stopped at 30th unit, so first calculate like that way. Calculate total time, calculate total time for 29 units, calculate total time for 29 units, number of hours, then calculate total time for 30 units, whatever will be the hours, the total time, and the difference which you will receive, that difference is known as 30th unit alone, and this is the time on 30th unit. 30th unit, see what is written, 30th unit. So whenever the learning is stopped, you need to calculate the time at that unit where the learning is getting stopped. Okay, the learning will stop after producing 30 units, and that time taken on 30th unit will be the time for all the next units. So we need to calculate like that way. Okay, now the value of B is minus 0.152. What am I doing right now? What was the formula? Y is equal to AX power B. Okay, sir, let's calculate total time for 29 units. How do we calculate that? Y is equal to AX power B. What was A? That was time on first unit, that is 10 hours. Okay, 10 multiplied by how many units? The units are 29. What was the value of B? minus 0.152, minus 0.152. Now see, this is the figure which is the average time per unit. It is the average time per unit, and I need the total time. So for total, I need to multiply it by 29. So I will be receiving the answer, which will be 29 power minus 0.152 multiplied by 10 multiplied by 29. The final figure is 173.83 hours. Now let's calculate total time for 30 units. It will be 10 multiplied by 30 power minus 0.152 multiplied by 30. That will be 30 power minus 0.152 multiplied by 10 multiplied by 30. It is 178.89 hours. 178.89 minus 173.83. This is 5.06. This is the time on 30th unit. Okay. Now what is the actual requirement? What is the total labor cost for 70 units? What is the total labor cost for 70 units? Now see students. Now see students, the learning will be stopped on 30th unit. Okay. Now the learning will be stopped at 30th unit. So there is a total requirement for 70 units. Is a total requirement for 70 units, and the learning will be continued till 30 units, and till 30 units the time is 178.89, and for the remaining 40 units, the remaining 40 units, the time will become constant, and it will be 40 multiplied by 5.06, which will be equal to 5.06 multiplied by 40. That will be 202.4. So now the total time will be 381.29. Okay, 381.29. So what will be the cost? 381.29 hours multiplied by dollar. What was the labor rate? That is $5 per hour. That is the total cost. 1906.45. This is the total labor cost. Now see, the learning is stop here. The learning is stop here at 30 units. Now this will be the time which will be constant for all the next units. This is the time which is constant for all the next units. Very good. Okay, students, I am moving towards the next slide. This question is totally your assignment. It's a very small and easy question, and there's a space for solution as well, 2 pages. And now there's a time for OTQ. There's a time for OTQ. We have to solve the OTQ. I have extracted this OTQ from the specimen exam. Specimen exam, and the question is already attached here. The question is attached here, and you can find from this handout section, that is specimen learning curve. Is it visible to all of you? Is it visible, this the specimen paper? Is it visible? Okay. The assignment question. Okay, I am displaying the assignment question. This is the assignment question. This is the assignment question. Okay. Now see, the following scenario relates to question 21 to 25. This is I have extracted from specimen paper, which is a sample paper from the examining team. There are 5 MCQs which is related to this question. Okay, ready? Students, are you guys ready? Are you guys ready? Hello? Okay. Crystal Trail, I'll give you the break after a few minutes. First of all, I think we should get the maximum advantage from this webinar. So the break will be given, don't worry. Okay, just read the case. Excuse me first. Read the case. Chair company has an development several new products. One of them is the new type of luxury car seat. The estimated labor time for the first unit is 12 hours, but a learning rate of 75% is expected to apply for the first 8 units. The cost of labor is this. The cost of labor is given. Now, the cost of material and other variable overhead is expected to be total 230 units, 230 per unit. Chair company plans on pricing the seat by adding 50% markup to the total variable cost per seat, with the labor cost being based on incremental time to produce eighth unit. To produce eighth unit. Now, what is the requirement? What is the labor cost of eighth unit? Where is the value of B? I'm not able to find here, which means we need to calculate by ourselves the value of B. How do you calculate the value of B? B is log learning rate divided by log 2. B is log learning rate divided by log 2. What is log learning rate? That is 75%, which you should say like 0.75. Can anyone calculate? Can anyone calculate the value of B here? Log learning rate upon log 2. Can anyone calculate? Maximum take it till 3 digits. Maximum take till 3 digits. Wait, let me open a rough sheet. This is specimen paper, OTQ. Okay, now students, this is my number one requirement. That is, we need, what was the requirement? What was the requirement? The requirement was to calculate the, what is the labor cost for eighth unit? What is the labor cost for eighth unit? Okay, so first of all, let's calculate the value of B. What is the calculate of value of B? That is log 0.75 upon log 2. What is the answer? Minus 0.415. Minus 0.415. And what is the time on first unit? 12 hours. And labor cost is 15. We need to calculate the time on eighth unit. All right. So we need to calculate time on eighth unit. Time on eighth unit. How will you calculate that? First, calculate total time for 7 units. And what is the formula? Y is equal to ax power b. Total time for 7 units. That is, what was the time on first unit? 12 hours. 12 multiplied by 7 power minus 0.415. B is log 0.75 upon log 2, that is 0.415 negative. So multiply by 7. What is the total time for 7 units? 7 power minus 0.415 multiply by 12 multiply by 7. It is 37.46 hours. And what is the total time for 8 units? That is 12 multiplied by 8 power minus 0.415 multiplied by 8. That is 40.50 hours. So what is the time on 8th unit? Yes. What is the time on 8th unit? That is 37.46 minus 40.50. It is 3.04 hours. 30.04 hours. And what is the actual requirement? Labor cost on 8 unit. What is the labor cost? That is 15 per hour. Labor cost is dollar 3.04 multiplied by dollar 15. What is the amount? That is 45.6. So there's a nearest option 45.65. There is a difference of rounding off and minus 45.65, or you can say 45.6. So means you can say option A. Is it fine? The question was time on 8th unit because the question asks so. Mr. Osman Alam, 75% means that labor time is getting reduced by 25 percentage. Mohammed Subhan, the learning rate is assumed to be constant all the time. That was the initial theory. Okay. Now, students, there is a very valid question, and I was I was thinking to address this, but I was waiting for you people to copy or able to understand. Now, for in those areas where the exam is not being conducted in a center and you are attempting the remote based examination, so that paper pen is not allowed for the remote exams, as you people are aware. So what is the thing? You need to use that scratch pad. You need to use the scratch pad. Okay, you need to use that scratch pad that is available here. You will be calculating on your calculator, but you'll not be able to write like this way on pen and paper, using pen and paper. Okay, so what you are supposed to do, that whatever I wrote here, I'm just trying to give you the demonstration of using the scratch pad, because of most of the students are concerned. Now listen all of you. I am using this scratch pad to solve this question. How? I will write like that way, total time. Now this is the scratch pad. This will not be visible to the uh, answering team, the checking team. The total time for 7 units. What was the total time for 7 units? That was 37.46. I just noted here. This is my rough paper. Instead of using pen and paper, I will be noting down the things here. Now from where 34.46 came, I use my calculator. If you are not able to use the calculator is here. The calculator is even here. You can use your numerical pads. Okay, isn't it? Is it clear? You can change your mode from standard to the scientific mode. So now you can use that thing. This is my calculator. Is it clear, all of you, how to use that scratch pad? Yeah, I can understand this way. This is to some extent a time-consuming activity, but it's still you have a time. See, today is 19th of August. You have got 10 days for this in this month, and it will it will be in your fingertips. See, the topic name is learning curve. See, the topic name is learning curve, and learning is achieved by the practice. When you will be able to practice this by yourself, it will be in your fingertips. Yes, Jonathan. Mr. Abibullah Sahib, it is not difficult. It's not difficult. When you will be thinking this difficult, it will be difficult for you. It will be difficult. When you will be thinking that no, I will achieve this, you can do that. It's not difficult, it's time consuming. I agree on that. But when you will be able to practice at least, uh, I give you the target, practice at least 50 questions on the scratch pad after the webinar. So you will be able to use this scratch pad. This is a user friendly thing. See, how am I doing? I'm writing total time for 7 units. This just I wrote. No, I will not. Okay, total time for 7 units. No need to write the complete sentence, because this is my rough e-paper. This is my rough paper. I just write total time. That's it. 7. It's okay. I know that. 7. Okay. No need to write the whole sentence. Total time for 7 units. It will take up a time. See, this is 37.46. Then what I did? Total time for 8. Total 8. That's it. It is in my mind. What am I doing? Pressing is equal to, what was the time? 40.5. I just calculated this thing. So using my own calculator, then use the calculator here. 37. Your numerical pad of keyboard will be workable here. See, I am also using this, my numerical keyboard. Minus 40.5. 37.46 minus 40.5. This is 3.04. Multiply by $15 for 45.6. I got the answer. Then I will be able to mark that option. I hope the scratchpad option is clear to all of you. The question asked from a student that how to draw the table. So excuse me, there is no need to draw the table. If it comes for minimax and maximax thing, so you are not required to draw this table right now here. Just write the thing, because um, if I will explain that thing, the topic would be changed. So it is better so that we can hear, focus here. Okay, now students, this is the option A. This is the option A, and for our understanding purpose, I will be giving you this sheet. Now question number 2. Now for question number 2, this sheet I am saving, and I will be giving it to you after the webinar ends. Question number 2. Now just read the requirement. What is the question number 2? Now students, question number 22. The first phase of production has now been completed for the new car seat. The first unit actually took 12.5 hours. Now see, the learning curve is also calculated using table. Now when you will be making the table, so when you will be making the table, learning is observed when the output is twice. This is the initial assumption of learning curve. So you need to prepare the table like that way in order to solve that reverse calculation. In order to solve that reverse calculation, that is units, and average time per unit, that is total time, and that is incremental time. What is incremental time? Incremental time is the absolute time on certain units. See, on units 1, then it will be twice unit 2, then it will be twice unit 4, it will be twice on 8. When the output is getting twice, the average time is getting reduced. Now, what was the requirement? What was the actual learning rate which occurred? The first unit actually took 12.5 hours. The first unit actually took 12.5 hours. I'm simply writing here 12.5 hours. Now this is the average time. This is the average time which is reduced by a constant percentage when output is twice. When output is twice. This is actually the theory of learning curve, that when the output is getting twice every time, when output is getting twice every time, then learning will be observed. Okay, now see what the information is mentioned here. That is total time for the first rate unit 34.3 hours. That's the total time. So I am writing in the column of the total time 34.3. Now how did I calculated this thing? By multiplying this average time. So I need to go back. 34.3 divided by 8. 34.3 divided by 8, that is 4.2875 hours. 4.2875 hours is the average time per unit. 4.28 is the average time per unit. Forget the last column. This is something you need to calculate as a reverse table. Units, that is average time per unit. When you will be making the table like that way, which is time which is reduced by a constant rate when the output is twice. So how many times the learning might have been applied? The learning might have been applied by 1 time, 2 times, and 3 times. The learning was applied by 3 times. That is 12.5. That is 12.5 1 time, 2 times, and then 3 times. By a constant percentage, the time reaches towards 4.2875. 4.2875. So now, what is the reverse calculation kind of thing? 12.5 multiplied by x power cube is equal to 4.2875, and that is x power cube is equal to 4.2875 divided by 12.5. If you want to remove the power, what was the answer? If I calculate this, 4.2875 divided by 12.5, it is 0.343. So if you want to remove certain power, so you need to take 1 upon 3 as a power on the both sides. That is x power cube 0.343 multiply by take power 1 upon 3, take power 1 upon 3. This will be cancelled 3, 3, and you will receive x. That is 0.7 means 70 percentage. That means in actual the learning rate was 70 percentage, option C. You can also calculate this average figure by simply dividing what was the total 34.3. How many units? 8 units divided by 8. You get simply the average time. You get simply the average time 34.3 divided by 8, 4.2875. This is a simply average time. This is a simple average time. But then average time has been started from unit 1 till unit 8, because the learning curve theory is when the output is twice every time, the time per unit will be reduced. So that is why I drew the column. This is 70% actual learning rate. See, uh, see this thing. Excuse me, I'm repeating once again. This is a total time 34.3. This is a total. So I got average time 4.2875. All right. I think this is a simple thing. Now the first unit took 12.5 hours. First unit took 12.5 hours. And if I can guide you in another way, in a more simpler manner, so you can say like, how did you calculate it, the average 34.3 upon 8? 34.3 upon 8. It was 4.2875. 4.2875. This is the average time. Now, it is the basic learning of theory concept that learning is applied when the output is twice. First unit, then second means double, then double, and then again double. So first unit it took 12.5 hours, and on 8 units it took 4.2875 hours. Now how many times the learning were applied? One time, two time, and then three times. So that means X percentage, X percentage, and X percentage. You got this thing. Ji, Mr. Subhan, I think this is much more simpler. You're most welcome. All right. So 1, then 2, then 4, then 8. First unit given. This is we calculated, which means 3 times learning was applied. 3 times learning were applied, and refer previous page for the detailed calculation. This is 70%. This 70%, which was option C. Okay. Okay, students, shall we proceed? All right. All right. The next question is a theoretical question, number 23. Hurry up, read this case. Okay, now I am reading the question. Another product which chair company has in development is a new design of high chair for feeding young children. Based on the previous experience of producing similar products, chair company had assumed that learning rate of 85% would apply. Had assumed that learning rate of 85% would apply, and but after the first phase of production had been completed, management realized that learning rate of 80% had been achieved. Now, students, tell me, at one side you have 85%, another side you have 80%. Which percentage shows the higher learning rate? Which percentage shows the higher learning? That's 80%. Very good. Not 85%. See, 85% means time is getting reduced by 85% means time is reduced by 15%, and 80% means time reduced by 20%. Now tell me, which is the faster learning? Which is the faster learning? 85 or 80? 80. Exactly. So I am writing here that 80% is the faster learning. Okay. Then go ahead with the requirement. Which of the following statement could explain why actual learning rate was differed from the rate which was expected? One, two, three, four, five, six. Now the good MCQ trick. Number one, the learning rate was faster. The learning rate were faster. Why the learning rate were faster? Because the production might be repetitive. There not be barriers might not be barriers in the production. Now students, why did you able to learn more faster? Because there were no disturbance during your learning. So which one is the correct option? Which one is the correct option? I am reading number one. I am reading number one. Staff were stable during the first manufacturing phase. Yes, if you were stable in the first manufacturing phase, then you will show your experience in the next phase as well. Number two, There were machine breakdowns during the production. No. If there would be the machine breakdown, imagine if there would be the machine breakdown, you would there might be the barriers. So it will not be the reason. Number three, assembly of the chairs was manual and very repetitive. The answer is yes, repetitive. 3. Number four, there was high staff turnover during this period. No, because when there's a high labor turnover rate, the learning is disturbed. The only thing you need to track from this option, how is 80% is the faster? How is the fasting? How fast you are? Number five, there were minimal stoppage in the production. Yes. The design of the chair was changed several times at the early stage. No. So 1, 3, 5 is the sensible option because the changed will not give you the learning. Something which is constant, you will be able to learn it more faster. Many students gave me the option B. That's very good. So option B is the correct one. Now question number 24. Chair company uses cost plus pricing. Cost plus pricing means cost now add profit, and which is usually called the profit markup. You will receive the selling price. Now come on. Which of the following statements regarding cost plus pricing strategies are correct? First of all, eliminate the wrong option. The wrong option is 4. Eliminate it. Why? When I will be eliminating point number 4, that means A will be eliminated, C will be eliminated. How? Cost plus pricing requires that profit markup applied when organization is fixed. Do you apply the fixed percentage every time? No. So first of all, find the wrong option. Question number 4 is wrong. The fixed percentage, there is not a fixed profit for percentage. It changes according to the situation, according to the customers, according to the season as well. Okay, now find the correct option. Number 3, cost plus pricing is a strategically focused approach as it accounts for external factors. No, it is up to you. External factors are not considered for your profit markup. So the correct option is 1 and 2, which is option B. Now how? Option 1, marginal cost plus pricing is easier when there is a readily identifiable variable cost. Readily identifiable variable cost, which means that the marginal cost is ready and you just put up the profit markup and you get the selling price. Number 2, full cost plus pricing requires the budgeted level of output to be determined as the outset. Yes, full cost, actually if I can explain here, what do you mean by the term full cost? What do you mean by the term full cost? Just see, full cost means variable cost plus fixed cost. This is known as the full cost. This is known as the full cost. And full cost includes the burden of fixed cost as well. And for fixed cost, you need to calculate the budgeted output. So you need to calculate overhead absorption rate. So that is the written full cost requires budgeted output to be determined at the outset. So the answer is 1 and 2. Okay, I repeat option number 3. I repeat, option number 3. In number 3 statement, it is written, that cost plus pricing is a strategically focused approach as it accounts for external factors. No, external factors is not the matter of cost plus pricing. Cost plus profit is my internal matter. It's my discretion. I will charge 12% profit, 14% profit, 15. It's my wish. It's my desire. It's nothing to do with the external factors. That is the thing. Now, students, come to the question number 25, which is uh, known as the probabilistic budgeting. And I need to explain the concept here. I will be solving here. Now, students, just see, this is known as expected values. What is expected values? Expected value is basically the of all the percentage of all the available figures. It's percentage of all the available figures. Now, student, just read this thing. Expected values is basically the percentage of all the available figures. Just read this question, then I will be explaining with the solution. Just read this. This would be the last question for today class. Okay, now I am reading. Chair company has also developed a new type of office chair, and management is trying to formulate a budget. Management is trying to formulate a budget for this product. They have decided to match the production level to demand. However, the demand is uncertain. Now, what are the percentages? The demand may be 10,000. I'm not sure, but the chances are 30%. The demand may be 22,000. I'm not sure. The answer may be, the chances are 50%. That the demand is 35,000. I'm not sure. It may be 20%. This is 20%. This is 50%, and this is 30%. It depends. It depends. We don't know about the percentages. Sorry, we don't know about the actual. We know we can estimate the percentages. Okay. Now the demand may be 10,000 units. 30% chances. This is my expectation, and that is called the expected values. This is 22,000, 50%. Why? Because I am expecting 22,000 to be 50%. 35,000, I am expecting it 20%. That is what is known as the expected values. Now, in expected values, what you are supposed to do, there's a lot of space here. In expected values, what we are supposed to do, take all the expectations. Take all the expectations of final figure. Final figures, either contribution or profit. But usually the decision making is based on the contribution figure. Okay. And the question is also asked for the what is the expected budgeted contribution of the product. Now, what is written here? Now, what is written here? That selling price is $25. Selling price is $25. Variable cost is $8 for any production level up to 25,000 units. If the production level is higher than 25,000 units, then variable cost per unit will decrease by 10%. and this reduction will apply to all the units produced at this level. Okay, now there are two possible variable cost. Number one variable cost is $8, and number two, my variable cost may be 10% lower, which is 8 multiplied by 90%, and it would become 8 multiplied by 90%, it would become 7.2. 7.2. Okay, this is the variable cost. But when this variable cost will be applied, but when this variable cost will be applied, 7.2, when the production level is higher than 25%. Okay, now see this thing at 10,000. At 10,000, variable cost would be 7.2. No, it will be 8. At 22,000, will the variable cost be 7.2? No, it will be 8. What about 35,000? It exceeds 25,000. The variable cost would be 7.2. Yes. So see, how do you calculate the expected values? Take all the expectation of final figures, either contribution or profit. Now the question asks for the contribution. Now listen, at 10,000 units, at 22,000 units, at 35,000 units, at 10,000 units, my contribution would be, selling price is 25. Students, remember the figure 25. 25 minus 8. The contribution would be 17. Next, 22,000 units. At 22,000 units, my contribution would be 25 minus 8. It is 17. But at 35,000 units, it will be 25 minus 7.2. It would become 17.8. Now you need to calculate the total contribution. That is 170,000, and 17 multiplied by 22,000, that is 374. That is 374,000, and 17.8 multiplied by 35,000. 17.8 multiplied by 35,000, it is 623,000. But the point is this, where are the expectation? These are the expectation. Expectation means whatever the final figure you will get, you will apply the percentage chances. Now what are the expectation? 30, 50 and 20%. That is 30%, 20%, sorry, 30, 50 and 20. Sorry, 30, 50 and 20%. This will be my expected values. These will be my expected values based on my expected percentages. 170,000 multiplied by zero point 0.3, it is 51,000. 374 multiplied by 50%, it becomes 187,000. 623 multiplied by 20%, 623 multiplied by 20%, it becomes 124,600. Now combine all these my expectations, it will result in 51 plus 187 plus 124.6, it will result in 362,600. 100. That is option D. That is option D. Now listen, my theoretical words. Listen to my theoretical words. Expected value means you need to incorporate all your expectations. You need to incorporate all your expectations. We will not require to deduct the fixed cost. Why? Because the question asks the expected contribution. Now this is the total contribution figure. Now I'm repeating my words once again. This is known as the probabilistic budgeting. Probabilistic budgeting means the budgeting based on your different percentages, the budgeting based on your different percentages on your different expectations. And what is the function of expected value is that to apply all the expected percentage on the final figure, either contribution or profit. But the question asked me for the contribution. But the question asked me for the contribution. Jawad said, got it? Oh, all right. All right. Is it clear to all of you? I will not end until and unless you will answer in the chat box. Learning curve is completely clear, sir. Thank you so much. You are welcome, Usman Alam. But all the thing, it needs the practice. It needs the practice. The recorded facility will be available. Now, I would like to say one thing, that I will be sending to you people maybe two videos. I will be sending you people maybe two videos. Number one, the video on the Botch company transfer pricing, which I had solved on this e-paper. And the second video, will be on the pricing topic. And the second video will be on the pricing topic. All right. So when I will make this video, I'll make a record this for you people, and I will be sending it to you. Yes, VFM I had already sent in the group. Okay, you're welcome. Pariska, you're welcome. I did send VFM Amir Hamza in the WhatsApp group. Okay, so till here, take care of yourself, take care of your health, and take care of your study. You need to practice more and see the recorded video once it will be available. Okay, bye bye, take care.